Next guest says that all the factors for a market setback have been in place for quite some time. Joining us now to talk about whether that's what we're seeing right now is John Roque, Senior Managing Director at Wolfe Research. We'd be remiss if we didn't. Let's start with the S&P 500.
Sure.
And tell us what technically you're seeing.
So we had a little break yesterday, or a big break on a percentage basis, but it's down 5% from its high. And, you know, the trend, as you can see, is still up, still supported by upward sloping moving averages, 50, 100, and 200-day. And this area in here, roughly, let's call it 3,200 or thereabouts, is where we think the support level is.
All right. So you meant you actually said percentage. On a percentage basis, not a big day. Yes, on a
not a big day on a percentage basis, but a big day in terms of points.
On a point basis. Hang Seng is something we can glean, or not?
Yeah, of all of the markets globally, we think that there's tremendous complacency here. You could see, and what we did here is we have a 30-week moving average in order to smooth the picture for the Hang Seng. And you can't make money long when the 30-week moving average is going down or sloping downward. Down 67% here, down 36% here. And you could see the 30-week moving average is sloping downward, and here we're only down 19%. So we think that this is where the complacency is, because investors believe China is going to flood the market with liquidity. But unless this turns up and starts to rise, it's very hard to be long this market.
All right. But should we glean anything from the Hang Seng about our averages domestically here?
I don't think that we're going to glean anything from that here.
I think this if you're long the Hang Seng.
Yeah, I think if you're long the Hang Seng, you have to be really cautious, but it's holding up better. And I think it's because people believe the Chinese government is going to flood the market with liquidity. But it's hard for me to believe that this one's going to hang up and everything else is going to be under pressure.
We talked about gold being way ahead of stocks, and bonds were way ahead of stocks as well, if you believe yesterday's big down move. But let's look at gold.
Okay, so gold, as you can see here, broke out of this giant base. We like to call it a Brobdingnagian base.
Yeah, this is a long term.
That's right. This is monthly. So this is a giant move here. And we think ultimately gold will make a new high above its 2011 high. And right now, gold, well, we'll clear those. This is what the long term looks like. Here's a real giant base here. Big breakout here. Another base here. Breakout. We think it gets above here, makes a new all-time high. And gold will make a new all-time high in all currencies. Right now, it's made new all-time high in 16 currencies.
That's like a 50-year.
Yeah, this is a long-term chart. This was a giant base, big breakout, another base breakout. We think it makes a new all-time high.
All right. You didn't bring us anything on the interest rate complex, I guess, at this point, did you? You got
demand for U.S. assets keeps rates low, and I think this is the way it's going to continue. The risk here is that the dollar breaks out to a new high, which sort of upsets the Fed's apple cart with respect to looking for higher inflation.